Grant off Chapter 9, Enterprise Funds, account for services provided to the general public on a user charge basis, or where the governing body has determined that periodic determination of revenues earned, expenses incurred, and/or net income is appropriate. Possible reasons for use: capital maintenance, public policy, management control, accountability. Examples: the City of Atlanta has 2 major and 5 non-major enterprise funds. The City of New York has no enterprise funds, but has a large number of specially created public benefit corporations. High Point, North Carolina has 6 enterprise funds, and the City of San Francisco has 8 enterprise funds. How many enterprise funds does your CAFRA entity have? Take some time to look at the list of common types of enterprise funds. As you can tell from these activities, there are external users who pay fees, user charges, and the entity, the state and local government, needs to know how the activity is doing on a full accrual basis. So, accounting for enterprise funds, the GASB Statement 34 provides guidance on business type activities. Must use enterprise funds if one of the following criteria is met: activity financed solely with revenue debt instead of governmental obligation debt, cost of providing services recovered by fees and charges, pricing policies are designed to recover cost from fees and charges. Thus, if one criteria is met, an enterprise fund must be used. Here's a question regarding an enterprise fund, utility plant, construction in progress. Should an imputed amount equivalent to interest be capitalized if a utility's own funds are used for construction? Yes, capitalizing an equity component of allowance for funds used during construction is permitted both by utility regulators and the FASB, and this is also followed by the GASB, so this does affect a state and local government's enterprise funds. Let's look at the municipal solid waste landfills. These can be accounted for either in governmental or enterprise funds. This is based on the previous slide where we looked at the criteria of when an enterprise fund must be used. If usage fees are charged, then it should be accounted for as an enterprise fund. Fees must cover all cost incurred before, during, and after landfill accepts waste. Closure and post-closure costs include equipment installed in facilities constructed after the landfill stops accepting waste, final cover, and monitoring and maintenance. If accounted for in an enterprise fund, the governments must report, but need not actually fund, both the expense and the liability related to closure and post-closure cost. Now, this is an enterprise fund, and we know that we have full accrual accounting and all economic resources. If the landfill is accounted for in a governmental fund, modified accrual accounting, current financial resources, the liability and expense of post-closure is reported only in the government-wide statements. There is no expenditure shown in fund statements for the closure and post-closure cost. This is a pay-as-you-go basis. An EPA rule requires all municipal landfills to meet stringent location, design, and operating requirements to minimize the potential for environmental damage. Operators must also provide financial assurance they can properly close landfills when full and provide post-closure groundwater monitoring for 30 years after closure. These stringent rules are designed to protect the environment from irresponsible handling of hazardous materials. Owners must estimate the current cost of hiring qualified third party to close the landfill and care for it 30 years after closure. So the current year liability expense, this is all economic resources, full accrual accounting, and the enterprise fund. This is determined by taking the estimated cost times the landfill capacity divided by landfill capacity, and that amount minus the amount recognized in the past. Annual adjustments are made as estimates change from year to year. Enterprise Fund, special current liabilities. In addition to the usual accounts payable and accrued expenses, there are two special liability accounts: customer advances for construction and customer deposits.